So everybody, thanks for taking the time to join us here. My name is Brett with Larky. I really appreciate you taking the time to join our FinTech Coffee Hour with the one and the only Mr. Tom Shen. Over the next hour, Tom's going to be speaking with Greg Hammerman, the CEO of Larky, about digital transformation, FinTech partnerships, and a couple other things. We're actually recording today's conversation, so those that aren't able to join us can go ahead and do so and participate at a later time. Part of the benefit of y'all being live with us today, go ahead and ask us questions during the session. I'll be monitoring it. Everyone's going to be able to participate in that. So don't hesitate to jump in and ask some questions there. I will pass those on to Tom and Greg as I see them. Post in the comments or in the Q&A, and we'll get started. So Tom, Greg, I'll let y'all take it away.
Thanks so much, Brett. Thank you, Tom, for spending some time with us this afternoon. You are in sunny California, as it looks like behind you, where it's a little earlier in the day. I am in Michigan, and Tom and I are both very pleased for those of you to join us today. Thank you for making the time, as Brett said. Tom, you are a bit of a rock star, maybe not a bit, but a large legend in this industry. I was on calls earlier today and mentioned our webinar, and they said, oh yeah, we know Tom, because every time I mention your name, people do seem to know you. And usually they smile. Usually they know you and they're happy about that. So that's a good thing. But I thought it might be helpful for if there's some folks on who don't know you as well, if you could give just a little bit of background on how everything you've done up to this point and what you're doing now. That's a lot, I know.
Well, thank you, Greg. I can't believe I'm on a webinar with Greg the Hammerman. And so I love that nickname, Greg. And so I hope everybody calls you the Hammer.
I don't mean to interrupt, but I got to clarify something. That was not my nickname until you gave me that nickname. And now everybody does call me that nickname because of you. You are the person who originated this nickname. So thank you.
That is so cool. That is so cool. That is so cool. Anyway, the Hammer. So we're hammering away. I'm absolutely delighted and honored that you would have me on a webcast, that we would have listeners and audience that would want to spend an hour of their time and listen to us chat away. So thank you for having me. Golly, a little bit about myself. So, I've just, have had a blessed career, right? I've been involved in several great companies over the span of, my gosh, 40 years of being in the financial services space. So what I like to say is I started in financial services before it was known as FinTech. I started really as an accidental entrepreneur. I started my first company, Software Dynamics, at the ripe age of 25. Software Dynamics was involved in branch automation. Now, some of y'all may not know what a branch is, but this is where you go in and people from the banks and credit unions actually help you with a transaction. They do it for you. And so a new account, sales service, open a new account, a teller line, back office, call center software. So ran that company for 20 years. We served over 1,000 banks and credit unions. And in 2001, my good friend Chip Mahan came in his private jet and said, I want to buy your business. And so we sold our business to S1 Corporation. And past that, later on in my career, I helped out internet banking leaders such as Digital Insight. I served on the board of Q2 in its early days, helped move the needle from 90 banks to 180 banks and credit unions. In 2010, I got the itch again and started a mobile banking only company called Malauzai. And after reaching 400 plus community banks and credit unions in 2018, Malauzai was acquired by Vista Equity and merged into Finastra, part of Finastra. So today, I serve on 5 boards. I chair one of them. The 5 boards are Axiom Bank, Bankify, CSI, Shastic, and Z Suite. And I am an LP in 2 boutique venture firms. So before we start to talk about what hopefully y'all here to listen to. I just warn our listeners and attendees that I will shamelessly promote my good FinTech colleagues and best-in-class organizations that I'm involved with. So shameless promotion.
That's awesome. I'm going to ask you one thing before we move on, because you and I've talked a bunch in the past, and the thing I don't know is how you originally got into banking. You talked about starting Software Dynamics. You talked about doing that when you were 25 years old. But I got to, and I think I know what you were doing in college, if I remember right. But not a lot of people, when they start their lives, think, hey, banking software. I've worked in this industry. I see a problem. Like, how did you get that first start?
Yeah. So just to be very clear, Greg, if you knew what I did in college, the best thing I did when I was in college was I dropped out. So I dropped out of University of Tennessee. I dropped out of UCLA. I dropped out of Cal State LA. I dropped out of many, many fine institutions. So I was a college dropout. I was flipping hamburgers, and I went to one of those programming schools, those 9 months trade schools, and I learned how to program computers. And got a job as a junior programmer. And I was hired to build out a teller system for a long ago company called Data Saab. Saab as in Saab Scania AB, the car manufacturer that we know in the United States, but they make jet fighters, and they made this time slicing machine. This is before real time. This is a time slicing machine. DataSob sold these terminals, proprietary terminals, to Citibank and Home Savings of America. And so I got involved in programming those DataSob terminals. They had a DataSob interpretive language and a DataSob assembler language, DIL and DAL. So I dillied and dallied around, and I programmed those teller systems, and that's how I got into tellering.
Now I know that little piece of story. Thank you. That's pretty cool. One of the main topics we wanted to talk about with the crew today was about digital transformation. And I think probably a good place to start with that is, how do you define digital transformation? You've seen a lot of it in a lot of different aspects, but when you think about it, how do you define it?
I like to say, Greg, that everything I talk about, I either borrowed or stole from somewhere. So Wikipedia says digital transformation is the adoption of digital technology by an organization to digitize products, services, and or operations. So I'll stick with that. The goal of digital transformation, more importantly, is value creation. It's value creation through innovation, invention, efficiency, and superior customer experience. So rewind for a second, quick history. Digital adoption pre-pandemic grew at a steady 10-15% a year. And during the pandemic, as we would expect, when everything shut down, the digital growth experienced as much as 100% annual growth. So we saw a spike. I remember pre-pandemic, we would sit around strategize about how to move consumers to a digital channel. Well, if we did this, this would happen, and so on and so forth. Well, pandemic did it all, and everything skyrocketed. So you think about our industry and where we are today. I dare say that every financial institution is involved in some form of digital transformation in one way or another, and often both internally and externally. So when you think about a quick example of external digital transformation, it is new account open. I'll pick the easiest, new account open. To be able to use your iPhone, use your Android, and open up a new account in 5 minutes without the assistance of a person. That's digital transformation in onboarding customers. Internal maybe a loan officer. Think about a loan officer processing an incoming auto loan. So you look at the application, you look at let's say at a credit union, you look at the members' information on the core system, and you try to match the two of those together. Well, previously, that's a manual job where someone says, well, Greg Hammerman, oops, the Hammer. Okay, he spelled his name wrong. You're going through there, his address, he moved, he bought a new house. But today, through this company, Shastic, for example, that I sit on a board of, shameless promotion, we match the two. And rather than have a loan officer sit there and spend 5 minutes matching up addresses and potentially making a mistake, the system matches the two up and tells the loan officer, oh my gosh, this person's moved to a different address. Either the core's got the old address or the loan application is not the right member, right? So these types of digital transformation, many organizations view digital transformation technology as the foundation for growth, for differentiation, for competitive advantage. So when you think again about our industry and you think about a financial institution, you think about a community bank, you think about a money center bank, you think about a credit union, when you think about their product set, how different is that? How different is that? So what's the differentiation, right? Brett King was really the first one to write about this in Banking 2.0, right? It's the journey to visit your money. The journey to visit your money, the delivery experience. I like to call that the 3Ds. We want that delivery experience to be distinctive, differentiated, and delightful, the 3Ds. Distinctive in that when you see it, you recognize it. Differentiated is not like the other credit union down the street. Delightful is that little emotive reaction when you're going through some experience where you go, oh, I like that. And we all have that,
right.
That little emotive reaction that says, oh, I like it, right? So tech-forward companies, by using digital transformation, can release new products faster, upgrade existing user experience, magnitudes faster than traditional ones. Tech-forward companies are really learning to be assemblers of solutions. So I use the word assemble. We assemble various pieces. We have foundational pieces, we have glue, but we assemble them together to give a better user experience. So let me pause there.
Yeah, there's lots of questions I have, and please, people, remember you can type into the chat and we'll get to those as well. But one of the questions I had, Tom, you talked about internal and external digital transformation. I'm curious, it was one of the things we think about at Larky is on the external side, the example you gave with Shastic, you can, a financial institution can roll out some new software internally, their team can use it, they can be trained, cool. On the external side, you talked about the drastic acceleration during the pandemic. I'm still shocked sometimes when I hear of some of the numbers of adoption that are still lower than what I would expect. I mean, people talk about mobile app usage in terms of the percentage of account holders. It used to always be 50 or 60%. It may be 70 or 80% now, but still there's a ways to go there. I was just at a conference where somebody was talking about statement printing and mailing statements. And I was astounded by how high, what percentage of people still want paper statements moved to them. So I'm kind of curious your thoughts on, are there still, should there still be a lot of discussions about how can we get this last 20% or 30% people to really embrace digital transformation? Or is it more of, well, they're just going to take their time and it'll get there over time?
Yeah, from my point of view, Greg, we've seen this happen over the last 2-3 years through the pandemic, and we've seen this spike and continue to grow. I think when we talk about mobile and desktop, we're talking about and. When you look at the usage statistics, there's a sizable number that use mobile only, but there's a larger segment that's mobile and desktop, mobile, tablet, and desktop. And so it's an and the ability to support these various interactions through these different form factors is important. More so, we know today that those users who come through different channels expect different experiences, right? The one that I use, and people are probably tired of listening to me talk about it, is my favorite airline, Delta Airlines.
Me too.
I love Delta Airlines. However, I use the Delta mobile app to board. I use the Delta mobile app to make last minute changes to find out where my plane's at and whether I need to change. I use the tablet because I have all my credentials on there. So quickly, less than a minute, I can pick the flight I want and purchase it. And I use my desktop to mess around with my Sky Miles to see where else I can go in the world for free. But yet, Delta.com, Delta doesn't know that I use these different channels to do different things. So, for example, when I go to my desktop, it says, welcome back, 3 million miler, platinum elite. Where do you want to go? Well, I don't want to go anywhere. I never buy a ticket from my desktop. Stop it. Okay. Now, one day I'm going to sign on and it's going to drop me into Sky Miles. And I think I'm going to fall off my chair. Right. That's the delight. That's the last D, delightful. That's delightful. Right. That is the notion that not only do you know me, you know my preferences, and you know how I use each device.
Do you know of anybody? That's a great illustration. Do you know of anybody doing this in digital banking? And I'm thinking about me personally, and everyone's got their preferences. I tend to pay bills from desktop. I tend to look at balances and do other things from mobile. I do remote deposit capture from mobile. So the same logic could hold, but my community financial institution doesn't do that. I don't know if anyone out there is.
I really cannot think of a financial institution that gives that kind of delightful experience. I struggle in my day-to-day living of the various apps that I use. Studies show that most American consumers use 8 to 9 apps on their phones consistently every day. I'm a huge baseball fan, so I pay to be on MLB.com.
Mm-hmm.
And I check my phone quickly for scores. I look at highlights on my iPad because it's a better view.
Yep.
Sometimes when I'm working, I will turn on my other screen on my desktop for the game to play in the background. But MLB.com absolutely do not know where I'm coming in from to give me a better experience.
Interesting.
I feel like this is an area, and I think it's a short bridge. I think it's a short bridge. When we were running Malachi, Rob, Danny, and I, we often talked about even just the tip of the iceberg of knowing coming in, because we do technologically, we do know whether you're coming in from a mobile device or a desktop, right? Or an iPad, different form factor. And so given that, if we just did one little thing different, wouldn't that be really cool? Wouldn't that be really delightful, right? But let me move on to what I believe to be sort of the next big rock in digital transformation. I believe that most organizations are laser focused on digital transformation in one format or another: customer interaction, user experience. So what's next? I believe it is the melding of digital and physical, or melded together, phygital. And I talk about that incessantly as well, is the idea of starting a process anywhere and finishing it anywhere. So give you an example. I'm onboarding myself and I'm trying to open up a new account on my phone. Take a picture of my driver's license. I get to the point where I got joint holders, and now I have a problem. And I'm starting to be annoyed because I really want to service myself.
Mhm.
And I'm doing it on my phone now. So what do I do next? Well, I'm not going to get in my car and drive to a branch, right? So I'm going to call the call center. What happens when I call the call center? I
It's probably going
start
to start over.
from
They're
zero.
probably going to start you right. Yep.
Exactly. And man, is that frustrating. Now I've got a bad attitude.
Yeah.
Now I'm annoyed. Now this delightful experience I'm having on my mobile device have turned into a disaster.
Yeah.
And I'm going to quit. I'm not going to continue, right? So I believe that as organizations spend money building out digital transformation, the time now is to bridge that gap with call center, with branch, and start to bring all that together where you can start from anywhere, finish anywhere. I know, Greg, you are a Larky, work on last mile delivery.
Sure.
I believe that's part of, it's not the solution, but it's part of the solution.
It's funny, as you mentioned that, you were talking about the different form factors you work on, in a few minutes ago. And I was thinking, part of what Larky does, push notifications. We know that we're delivering that device or to a mobile device. Most often a mobile phone, could be a tablet, but almost 95% of the time it's mobile. And so when somebody taps on that notification and it takes them somewhere, it's to the bank or credit union to decide where does it want to take them. And we can accomplish some of what you're trying to accomplish today with our technology. If this person's on mobile, they tapped on this notification talking about opening up a loan or refinancing or using their debit card, where is the appropriate place to take them from that form factor, from that experience? So it's not the digital thing, but it's going back a half step. But I think you're right. As our technology gets more widely adopted and as others do, there's definitely an opportunity to stop that frustration for people when they start in one environment and go in the next. I wanted to ask you one other thing. You talked about the 3Ds.
Yeah.
Differentiated was the second D, right?
Yeah.
I'm curious sort of your thoughts, as there's the digital providers, there's several of them. They have a solution. They interface with lots of partners. We're one of them. We're partnered with a bunch of those folks. But is the differentiation quickly becoming what any individual financial institution picks from that toolkit? Or how do you see them differentiating if they're all using, when you had, you said 400 Malzai clients, they're all using the same framework. What differentiates them and how are they able to stand out?
Yeah. So there's really sort of two ways to think about that. Well, three ways. The first way is what I call good enough. If you look at digital as good enough, then as a financial institution, if you look at digital as good enough, then you take what's out of the box from a digital provider and you give that to your end users and you're done with it. The only differentiation is got bank X on it versus credit union Y. Okay.
Blue instead of green. Yeah.
Right. And when you put them side by side, they look exactly the same, they work the same, and so on and so forth. So that's good enough. Now, if you view digital as a strategic differentiation for your financial institution, then you would go to one of the providers that allow you to build out a separate looking user experience, differentiated. Now, remember, differentiated is not necessarily better, but it is different.
Good point. Yep.
Okay. Especially when it comes to UX, right? It's a bit in the eye of the beholder, right? And so you can say, for example, at Malazai, there's maybe a dozen templates you can choose from. And so you can pick the UX that you like when you build out the application.
Mhm.
So it's a little bit differentiated. So Bank X down the street from Credit Union Y could actually look drastically different. Now, if you want to take it to the next level of differentiation, then there are digital providers that in essence provide you solutions that we call headless. So you chop the head off, and in essence, the financial institution would drive. They would have their own UX group. They will build out the user interface.
Right.
And that will be connected to the digital experience. But the actual user experience is owned by the financial institution. That's the highest level of differentiation.
Where do you see the choices that a financial institution makes on, who they use for bill pay, who they use for remote deposit capture, if they offer crypto, if they offer buy now, pay later, where does that fit into differentiation? Because there's choices that are being made there every day, right?
Right. And most financial institutions today choose to partner for those types of those types of solutions, either through their digital provider or directly building a relationship and
Sure.
include it in the digital experience. Depending on the digital supplier in the marketplace, you can pick and choose, and you can integrate as you feel comfortable. Which leads to our second topic, right? Leading a monkey to water, which is digital partnership.
Yes, let's go there.
Let's go there. So digital partnerships. So let's talk about that. FinTech partnerships. There's many variations of partnerships. So sort of to simplify for our discussion today, I'll talk about two. The first one is FinTech to FinTech. And FinTech to FinTech is generally, not always, but generally an established player needing to differentiate with shining objects from a new entrant. Okay, an example would be Larky partnering with Q2.
Mhm.
That would be an example of that, right? Q2 is an established player. It's got a large customer base, successful customer base. Larky's got a shining object that Q2 would never build, and they would incorporate Larky into that solution, right? I sit on a board of CSI. CSI is partnering with Hawthorne River for lending and is having a tremendous year, tremendous success partnering for a lending solution. So these are examples of FinTech to FinTech.
Mhm.
One of the newer models today, from both sides, from the established player and also from the new entrant, is to think of integration and delivery as an enterprise model. Turn it on once for everybody. And those financial institutions, or even down to those individuals that don't want the solution, they opt out. So that simplifies the delivery experience. It simplifies the implementation. Build once, turn it on for everybody. The economic pipe flows better as well for both parties, and you get wider adoption. But what that means is it requires a mindset that I call partnership ready, both for the established player and also for the new entrant. For established player, for the established FinTech, they may want to own their customer experience.
Mhm.
So they need to integrate as such that it doesn't look like what we used to call rough border crossings. If you remember the early days of internet banking and bill pay, whenever you wanted to pay a bill, it went off to another site.
Yeah.
And it was awful experience, right? And you wonder if it's secure or not, right? So established FinTechs may want to own the total user experience. So when they integrate, they need to give the new entrant the ability to integrate easily.
Mhm.
Because if it's hard to integrate, you're not going to do it, right? So partnership ready. The new entrant, on the other hand, needs to understand and be staff ready for a B to C support, because you're supporting the end users of your established partner, but you're once removed from that.
Yeah.
So this is what I call partnership ready, a mindset. It's a mindset, an organization structure. I'll give you a simple example. When we were at Malazai, at the big table, we had a chief partnership officer. We could be sitting around the table discussing a $50 billion financial institution having a problem and needing to put resources on to solve it, where the chief partnership officer is saying, well, I've got this $200 million financial institution having a problem, and I need the same resources. So how do you prioritize? Oh, wait a minute. The 200 million credit unions having the problem. There's 50 other customers that's having the same experience for that partner. So now balance the equation. So we had Steve Rich, our chief partnership officer, at the table with us so that we get a balanced view of how to prioritize resource allocation, right? So it's a mindset. And if Steve wasn't at the table, who would argue for the 200 million credit union versus the $50 billion bank that we're trying to solve the problem? Let me pause here.
So your partnership ready fairly early on.
Right. You need to think about that, and you need to think about the construction of the company and your how you architect that. So that's the first variation, right? The second variation is FinTech to financial institution. In this case, financial institution using technology as a competitive advantage, the assemblers that I talked about, where the financial institution says, look, I will use pre-built solutions, but assemble them together. And most established players today have gone back to open up the architecture with the integration layer to various degrees of success, where the new entrants like yourself, the solution itself is built with an open architecture so that tech forward financial institutions can just assemble them together, often under their own control.
You've made the comment, I've heard you make the comment that financial institutions are more and more striving to become fintechs or to even merge with, or let's talk a little bit more about that, because I'm curious, as you talk about them assembling, they do need to have a slightly different skill set, well, not slightly, a wildly different skill set than traditional banks do. So tell me more what you think about that.
Yeah, absolutely. So let's leap over to talent wars. So one of my pet peeves today is when you think about digital transformation, when you think about financial institutions turning to fintech, as you said, it requires a new set of talent. And quite honestly, many organizations don't even recognize what talent they need, much less to acquire, how to interview for them. So talent acquisition is really becoming a competitive differentiator, talent acquisition. And then the big rock behind that one is talent retention.
Sure.
You get them, you can't keep them, they move on, right? So when you think about acquisition, it is about vision. If you have the right vision, you can acquire the right talent.
Yeah.
Okay, it's about vision casting. Retention is about culture. So many organizations are rethinking about talent acquisition. Many organizations, fintechs, are thinking about that, of apprenticeship, for example, about upskilling and educating the existing workforce. It's a different way to think about work and about delivery. I'll give you an example, shameless promotion. I sit on a board of a sub-billion-dollar bank in Florida, Axiom Bank. A few years ago, the bank decided to change directions and brought in a new CEO, Ross Bruning. And he put together a vision of moving the sub-billion-dollar bank towards banking as a service in a fintech direction. Ross, being in Orlando, recruited senior technologist Mike Coyne from FIS to lead the effort.
Wow.
Mike had a large followership and over time brought over a dozen top talented technologists to the bank. Quite honestly, if it wasn't for Mike, I would not be on their board. Mike recruited me to their board. And my first thought was, what am I doing on a sub-billion-dollar community bank board in Florida? My gosh. But I understood the vision of where Ross and Mike wanted to take the bank. And because of that, we now have a superior technology team, and Axiom Bank is winning the race for talent. So it's important to think about talent, think about acquisition and retention. It's a real pet peeve of mine to help leaders think through that.
Yeah. Larky's very first client when we were first getting started was a probably $400 or $500 million credit union. And the CEO, I remember telling me, I need to embrace new technology. I need to be constantly doing new products and rolling out new things, not just because it's what my members expect, but it's a retention and attraction technique for me because I'm trying to get energetic, thoughtful people to join my team. And if they think we're just going to be a boring financial institution that's going to do the same thing we've done for 40 years, nobody's going to want to join. If I'm telling them, hey, we're rolling out this new thing, we're trying this, we're going to work with this partner, that is something that helps me attract people and retain people. It's the first time I'd heard a CEO articulate that, but I thought that's a really insightful way to think about, how to attract people and how to really put an image forward of what you want to be and who you are.
Right. I'll do more shameless promotion. 3 years ago, Jay Tooley, president of $3 billion Leader Bank in Massachusetts, wanted to spin out an application developed by the bank to help multi-tenant building owners. And he reached out to me for help through a friend and said, hey, can we do this? Does it make sense to do this? And how do we do it? We put together a plan and we recruited Nathan Baumeister to lead the new company. Nathan that worked for Kasasa. Our new company was called Z Suite Tech. And Nathan was able to dig in his talent network and bring on Aaron Coleman to lead sales, Aaron Janot, we only hire Aaron's, Aaron Janot to lead technology. And later brought in, not Aaron, but Jill Filer to lead customer success. And the team transformed this single purpose application into an entire digital escrow platform. And today, you don't have to read a lot to know that the demand for deposit is very, very high.
Oh, yeah.
And Z Suite is growing at 300% per annum, right? Talent and a bit of good luck can win the war, right? So here's another example of a tech-forward bank understanding that that application living within the bank is not going to be successful long-term, pulling it out, and then building a fintech from that. Now, certainly, Leader Bank is a huge user of Z Suite technologies, right? But having a team like that, talent. A friend of mine, when I was a young developer, a friend of mine said, when you hire good people, you can sometimes be successful. You have a lot of options. When you hire bad people, you can only get one outcome, right? So the talent war is something that should be on the top of mind of every financial institution, of every organization.
Makes sense. It's interesting. You were talking about tech-forward banks, tech-forward financial institutions, and the talent war. I'm always curious when I speak with them. Larky, we are push notifications, right? We're engagement. We're proactive outreach to account holders. And it's interesting that the mix of the opinions of the management of a financial institution and the data of the real world. So it's funny that I'll be talking to someone say, oh, I get push notifications sometimes, but they never do that much for me. And, now we're at a point with Larky where we can say, yeah, about 90% of your account holders will turn them on and get messaging from you because they want to use this channel. About 65% will turn on locations so you can talk to them about things that are relevant where they are. So there's this interesting tech forward is important. Also being open to the things that are in your life may be different in the lives of your members or account holders, and being able to embrace those things and looking to the data. And I think
Right.
that's a risk for all of us, right? It's pretty easy for all of us to say, I don't like to long walks on the beach, and so I'm not going to the beach. But you got to realize a lot of other people like going to the beach. It may make sense to get
Right.
some beachfront real estate. So it's an interesting piece of it all. I'm curious. I've always wanted to write the paper. I haven't had time yet, but has any research been done that you've known about early adopting banks or tech forward banks and success as it's measured by either their growth or their profitability? I've always been curious if anyone's drawn a line and said, hey, people who exhibit these behaviors as leaders of financial institutions tend to deliver these results, or if that's not a research that's been done yet.
Yeah, well, look, the results are public, right? Those financial institutions, like Larry at MVB or Coastal, Crossroads, these financial institutions, maybe not this morning when all the regional banks shares are down, but in fact have much higher enterprise value, right? They have much higher multiples for the financial institution. So tech forward banks over the last, say, 18 months or so are getting higher valuation, okay? Now, there's a flip side to all of that, unfortunately. Because of the demand for their services and for fintechs, many of them have grown beyond, I'll use the word talent, beyond their talent, and risk mitigation and handling risk. As an example, at Axiom Bank, we've been studying about managing the risk for account holders and understanding the responsibility of the financial institution, although once removed from a fintech, is to understand where the sources of money are coming from for each account holder of the fintech, right? These are new areas that we're trying to solve for.
Yeah.
And there are fintech and tech forward financial institutions that have grown too fast and gotten in trouble. Fortunately for our business, there's a new crop, and I won't name them all, but there's a new crop of regulatory and compliance software that's coming to the table today that's much needed, that doesn't just manage the risk of the financial institution, which we're comfortable with and we know how to do, but is to manage those fintechs that are once removed. Right. So some of the older school technology would manage it for the financial institution as a box, where the newer technology are coming in and saying, no, it's not one box. It could be 1,000 boxes, but under one risk umbrella of the financial institution, right? So a number of these companies are starting to come onto the market to help the financial institutions, tech forward financial institutions, manage risk.
I think it has to happen, right?
Yeah, there's a need. There's a need.
I just saw a question popped up from somebody who's on, going back on something we talked about several minutes ago, but he said, I agree the technology experience and the customer interaction via multiple channels, so I think this is back to the phygital conversation, is at the core of customer satisfaction. How important is the human factor for call center and branch channels? And do you see AI playing a role in the app or in the human portion to ensure constant high quality service? So getting into AI.
Yeah, absolutely right, Greg. I mean, really, we're talking about a cultural issue. Is the financial institution's cultural disposition, right? I hearken back to the days, and many of our listeners may not remember this, an organization like MBNA, where they were focused on customer satisfaction. Maybe when we think about our everyday lives, is the long lines at Chick-fil-A. Why is there such a long line? Because it's got great food and good customer satisfaction. I mean, I have to tell you, I hate healthcare. Okay, I'm just not really good with healthcare for myself. Recently, I had to go to Kaiser to do something, and I got to tell you, I was absolutely amazed at the level of customer service. The end, the interaction with, is there anything else you need? It was really a delightful experience for me. So yes, absolutely, the people culture. And I feel like financial institutions, as they move into digital transformation, need to continue to pay attention to the people culture, because when you think about it, when you do digital transformation right, you may be knocking off 75, 80, 90% of the customer interaction in a delightful experience. Now you really got 10, 15% of focus on your people to make sure they bridge that. So the answer is absolutely, and all of us are consumers. We know that when we feel good from an interaction and how we don't feel good from another interaction.
Definitely. Another question that just came in. Sorry, Lisa, I'm going to cut the first part of your question. So straight to the meat of it, I think. What would you recommend for a tech-forward FI and all these fintechs to do right to get in the Chat GPT game? So as we're getting into not just human interaction, but the Chat GPT and the amazing things that we're starting to see from that, is there a plan?
Yeah, I've been reading furiously about Chat GPT. I use OpenAI to test various ideas. A couple of the companies I'm involved with is right in the midst of AI. I don't have a point of view on how financial institutions should use this particular technology today. I believe there are dangers, but I can't quantify them. I believe there will be regulatory and compliance concerns coming into play, but I have not formulated a point of view. I'm sorry.
Sorry, it gives us a follow-up. We can have another webinar down the road. We can ask that question. My shameless plug, I guess, that was a real question from Lisa, but my shameless plug, we are not using ChatGPT at Larky, but we did start to use some AI work with when somebody goes into our portal and they're drafting a message that they're going to send to account holders, and they're saying, hey, here's what I want to say, that we've got great rates on auto loans, or we have great CD rates. We're now providing a nudge score. So it is the sort of engagement level that the text that you just put in is likely to receive based on analysis of every other nudge that we've ever sent out from our platform. It's been an interesting thing to roll out. And I was told that one of our clients was gamifying it. They were frustrated that, hey, we can get a better nudge score than this. Let's try again. Let's use different words. Let's use emoji. And it's starting to become very interesting to us of how we can help people be very successful in our platform with AI. So it's been a lot of fun on that side.
Yeah, absolutely. It potentially is a game changer. Again, I don't know enough whether to call it that or not, but as in all technology, is how do we harness it? Yeah. Is to learn, to understand, to form a point of view, and then to harness it. Which sort of brings me up to what's going on today, right?
Yeah.
We live in such an uncertain world today where everything is being recalibrated. We're getting shock after shock, right? Energy prices, interest rates, inflation, bank failures, for gosh sake, right? Radical changes in consumer small business behavior, right? What we think is stable ground starts to shake. And I sit on boards, I talk to leaders, how do we prepare for uncertain times, right? With so much adversity and ambiguity, and sort of the two words that I use, and you can think about it, as a game, is defense and offense, right? And on the defensive end is resilience. How do we build resilience into our organization? That's playing defense.
Mhm.
And this is not or, but and, which is playing offense, which is the courage to make changes, right? Deal with adversity, ambiguity, withstand shock, is the ability to plan for different scenarios and to adapt fast. That's resilience, right?
Yeah.
And dare I say, comes the talent, the ability to have people on the team that can handle adversity and ambiguity, is develop scenario quickly, what to do next. At the same time, to have the courage to change. And that often speaks more to leadership, is be able to lead change, is, as an example, digital transformation, lead technology to speed up change, right? So stay close to customers, understand their new pain point, not yesterday's pain point, but today's pain point, right? And did I say talent war again, right? About people, about building the team.
Always insightful. We have a little less, well, we got about 5 minutes. To close us out, I wanted to do a little bit of a lightning round with you. You don't have to answer in one word, I promise, but just sort of short, quick thoughts on things, some related to our industry, some related to just the world at large. And if anyone has any more questions, we could probably squeeze one more in. So ready for lightning round, Tom?
Sure.
Tablet or mobile?
Tablet.
You are welcome to say a sentence or two of thoughts behind it, but I'll go on if you want. Cash or card?
I use mobile, and mobile is in my back pocket all the time, but I enjoy tablet to watch my Dodger highlights and buy airline tickets and so on and so forth. So I use tablet, I think, more than the average person. So that's why I answer tablet.
All right, cash or card?
Card.
Expansion or consolidation of fintech? Do you think there's going to be more fintech starting in the next 12, 18 months, or more that are consolidated together either through mergers or not making it through challenging times?
Yeah, if you're asking me in the next 12 months, I say consolidation.
Is it different if it's a different time span? If I say 24 months or 36 months, do you think it's different?
Well, it's just the law of business, Greg, in that funding is very, very difficult to come by. Organizations who that's learned to burn cash without a good business model will go away. They're not going to survive in the next 12 months. If you're trying to raise money right now and you're burning cash, it's really, really hard to raise money in the next 12 months, understandably so. However, in the law of business, as the forests thin out, guess what? New trees will grow, right? Yep. So we're going to see an uptick again. We've seen these cycles again and again, and there will be new companies that'll come out because there's going to be a lot of sunshine. There'll be a lot of oak trees, but there will be sunshine where the new trees will get to grow. Yes.
That's gas or electric in terms of car, not cooktops?
Gas. I will buy the last. So those, me, I like fast cars and I like gas cars. I like to go boom, boom, boom. So I'm sorry for all you gas car haters. I'm sorry.
All right, moving on. Paper or e-statement or receipt? If you're standing at checkout and they say, do you want me to email your receipt to you or you want it printed? What do you say? Okay.
The audience will kill me for this. I get e-receipts. I don't want paper. However, I do get printed statements because I do my accounting a certain way that I actually write notes in my statement for future tax purposes.
All right. Crypto or no?
No.
Facebook or LinkedIn, and I see you on both of them more than I can imagine. So you got to pick one though, Facebook or LinkedIn.
Oh my goodness, I have to pick one. I use both. I have more fun on Facebook. I'm always tongue in cheek on Facebook. So I make stuff up and people react to it, and it's just tongue in cheek.
My last question for you. I've been enjoying watching your travels more on Facebook, maybe on LinkedIn, but where's next? You got any good trips coming up?
Yeah, well, I sit on a board of Bankify that's located in Manchester, so I go there 2-3 times a year. The next big trip is Sevilla. I'm learning how to pronounce it correctly. So rented a 2-bedroom place across from the cathedral, if you know Sevilla, and we'll be spending the second part of July and the first part of August there, and learning to drink cheap wine, and I don't have to learn, I know how to do that, and consume massive quantities of tapas. So Sevilla is the next fun trip for me.
Awesome. I can't thank you enough for spending the time with us this afternoon. It's, as always, been a joy talking to you. Lots of fun and educational, and we appreciate people that joined us today and asked great questions and contributed to the conversation. So thank you all for joining, and thank you, Tom, for spending the time with us.
Yeah, thank you to the audience, to the attendees. We wouldn't be here without you all. Of course, Greg and I chat all the time, and we actually just talk like this, right? Most of the time. And so thank you so much, Greg, and all the best to Larky, and just continued success in the marketplace.
Thanks, Tom. Be well.
Okay. Bye-bye.